Hi, hello. So now let's move on to the tutorial 8, which is also a very important part regarding substantive test. And in this tutorial, all the questions will be about the sales cycle. So when we're auditing a specific area, the following key considerations should be followed. First, we need to understand the key procedures, actually the whole business cycle, the whole operation cycle. From that, you need to identify what are the key documents, key accounting treatments, and also key controls. So based on the understanding to the business risk and also the control, the auditors would have a preliminary audit strategy, which is either predominantly substantive approach or otherwise the lower sales control risk approach. So if the lower sales control risk approach is adopted, then auditors would rely on the controls. So test control should be conducted as mentioned in the last lecture, and then substantive tests also need to be conducted in relation to the collection of detailed evidence regarding those assertions and accounts. So the four questions are actually very, very basic and simple. So in the first question, you are planning your year-end substantive procedure for each of the two independent situations. You need to explain how the information would affect nature, timing, extent of the substantive approach for occupancy revenue in situation 1 and purchases for situation B. So it is something happened in the nursing house in Victoria. So for any question, I would actually suggest you to highlight the key information as what I have done here on the screen. Then you probably need to analyze the question by yourself. So what has been the impact of those two cases, of the case on the occupancy revenue and also purchase with regard to nature, timing, and extent? Regarding the occupancy revenue, so given the reliability of the control, the room rates are set by legislation and also high rate and stability of the occupancy rates. Therefore, so we, as an auditor, we probably would like to determine the substantive test performed will be analytical in nature rather than testing the transactions and balances, because actually the control and also the situation of the occupancy revenue has been very reliable across different years. What about timing? So ideally, substantive approach are performed at the or close to the year end. So there's nothing to indicate this couldn't be done in this audit case. So therefore, we also suggest the substantive procedures. The predominant substantive procedures will be performed at or close to the year end. Extend, so that is how much evidence you're going to collect. So because the control has been quite stable and reliable, therefore we will rely a lot on the internal control of this company, then the level of the substantive test will be quite limited. So the impact on purchase. So in this case, the lack of control and also the unpredictability of purchase has meant it would appear that substantive analytical procedures in the case regarding the purchase might not be appropriate. So you need to have more detailed substantive test details in terms of transactions and balances to be collected for the purchase. Timing. So, because Ideally, substantive test details would be performed at or close to the year end. So in the cheap store case, so it could also be done close or at the year end. However, because a lot of tests would also be about transactions, so if it is possible, it could also be done in the interim stage. Extend. So if you go back to read the case, actually for the cheap store, they do have the lack of control. So that means there is a high control risk regarding the purchase cycle. Because the purchase cycle has been quite material, so significant level of substantive test details will be performed. So what do we mean by significant level of substantive test? That means larger sample, and also we want stronger audit evidence. Okay, question 9.18, it is about the sales cycle, and requirement here is based on the case, quick clean company's audit case. For each of the assertion of accuracy, completeness, and occurrence, identify a proper audit procedure. So as we usually do, so we understand the requirements, that is for each of the assertion, accuracy assertion, completeness assertion, occurrence, to design the audit procedure. And also we need to analyze the case by highlight the key information. So based on the analysis to the case, audit procedures for accuracy, which is accuracy of revenue, has been designed as trace a sample of sales to the receipt book to ensure the details, in particular, all the details of dollar amount are correctly recorded. Completeness. So usually completeness will be quite different, will be opposite from occurrence assertion, right? So for the completeness of the sales, you are going to undertake analytical procedures based on the average number of billable hours. Also, you could take a sample test on the sample receipts from the receipt book to ensure all of those recorded. All of those happened has already been recorded. For completeness assertion, remember, we also have a special procedure which is usually about the pre-numbered documents and also sequentially accounted for. So here you just test. All the sales receipts has been pre-numbered and also sequentially accounted for. In terms of the occurrence assertion, so corresponding to the sample test of completeness, which is basically the tracing approach. So for occurrence, we use the vouching approach. So vouch the sales records to the receipts book to ensure. So every transaction, sales transaction in the receipts book has the genuine sales record, right? And also for the other two approaches, the first one is get written confirmation of the sales performed. So that is the external confirmation of the service performed. That could be a very, very strong evidence in terms of receivables and also sales, right? And then you could also use analytical procedures. Undertake the analytical procedures based on the average number of billable hours, which could be very useful in this case, because in this case, the billable hours are quite, could be quite analytical and also could be quite predictable. But we also need to say, so if you are only designing one audit procedures in terms of any assertions, unless it is a review engagement, if you want to achieve reasonable level of assurance, we wouldn't suggest to use analytic procedures, because analytic procedures couldn't provide very strong evidence to important to significant material assertions. Okay. Question 918. In this requirement, you are auditing the financial report of Top Dog company for the year. You concluded your team couldn't rely on the internal control and the existence of accounts receivable is at risk. So requirement, please identify procedures you can use to test the existence assertion for the receivable. B, how would you answer change if it was established internal control was operating effectively? So this question has been a very fundamental and also theoretical question, right? So basically, if the internal control is not largely relied on, so you are going to design a set of audit tests which could give you very sufficient and appropriate audit evidence on the receivables existence, right? So what, in terms of sufficient appropriate audit evidence for receivables, I think when you see accounts receivable audit, the first one you could always think is the confirmation, external confirmation, because it is very reliable and also it is quite strong. So the first audit test would be about external confirmation, confirm receivables from customers in writing. And the second one would usually be about the corresponding transaction test. So you do the sample test on the documents, verify the sample test on the sales, so vouch from subsidiary ledgers to those supporting documents of sales. Last one, right? And also the subsequent receipts of the accounts receivable would be also the very strong documents for the existence and also collectability of the accounts receivables. Therefore, you would also verify whether the amount in outstanding receivables is subsequently received, which is also in documentary inspection. In terms of question B, because question B highlight control risk seems to be quite low, then so this will reduce the risk of material misstatement for these assertions. So you are going to reduce the extent of the substantive test as outlined above. Then, but still the remaining tests still need to be sufficient and appropriate for the audit evidence to make a conclusion. Next one, so still a very simple case. Based on this sales case of No More Stand Limited audit, how will the above finding affect your audit approach to accounts receivable? For each outcome lists the risk that has been highlighted as a result of the auditing test performed and indicate any additional procedures you may perform as a result. So we have got the background information of this company, which is manufacturer and wholesaler of cleaning product. And the assistant has performed positive accounts receivable confirmation of 100 accounts receivables with the following outcomes, right? So how will these findings affect your audit approach to accounts receivables? Because so actually those tests will indicate the testing results in terms of different assertions. So I think first you need to understand what will be the implied information in those outcomes. So first, one confirmation letter was returned signed, but no indication whether the balance was correctly or incorrect. So, so that means actually the replied confirmation letter doesn't give you enough information. So these might be about the accuracy assertion, right? Second, 6 accounts receivable confirmation has been returned unopened and marked return to sender. So from this outcome, you would wonder, are those relevant receivable holders, the debtors exist or not? Are they real accounts receivables or not? So here you doubt about the existence and accuracy assertions, right? Third one, so 3 confirmation letters received indicating balance was incorrect. Your assistant discussed this matter and was informed the company has issued credit notes after a year, and the balance confirmed by the accounts receivable reflecting the details after the credit notes has been posted. So basically, it is about accuracy, but to be more detailed, it is about the cut-off issue. So here, you wonder whether shall you do more cut-off test or not, right? The last one, no reply has been received for 12 confirmation requests. So are those debtors existed or not? Okay, so after understanding of those outcomes, we can move on to the answer sheet. So first, the concern is evidence suggests the accounts receivable exist, but probably provides no proof of accuracy. So the assertion highlighted here would be accuracy. You are going to, because of those concerns, you need to think about what you need to do in the next step. So here that is additional procedures to ensure the evidence is sufficient and appropriate, right? So you are going to send a second letter requesting confirmation again. Also, otherwise you could agree the debt to supporting documents or payment receipt of the year, or you could also confirm the account receivable balance verbally from the debtor. For example, you call them, right? Second, receivable might not exist or might be uncollectible if the business has ceased trading. So here, the assertion highlighted would be about existence and also accuracy. So in this case, so actually the assistant need to do more job, for example, to discuss the responses with the accounts receivable clerk to ensure why you could have received the correspondence, the reply. Are there any changes in the client details? Do they maintain the up-to-date information about all the customers? If you know the reason, probably you send another set of confirmation letter. Otherwise, you could also do what you have done for question 1 to get alternative evidence from supporting documentation regarding the payments received after the year, right? Okay, number 3, accounts receivable might be overstated if credit notes are not recorded in the correct accounting period. So basically that is a cut-off issue, of course, will also be relevant to accuracy and valuation assertion. So based on this finding, to get sufficient appropriate audit evidence, you would also add the following procedures. For example, discuss with the company's accountants about the normal time of processing the credit notes. And also just to check the details of the credit notes issued around the year end, so to do a cutoff test, but not just about purchase, sales, receipts, etc., and also have a special focus on the credit notes to ensure they all have been recorded into the proper accounting period. Number 4, receivable might not exist, right? So that is about existence of receivables. So actually, those above mentioned additional procedures will all be relevant. For example, the second request letter, subsequent receipts test, or confirmation of the debts, and also agreeing to the sales documentations. Okay, so for the last one seems to be the simplest, but actually it has been very, very summative. So if you can extend each of that to one sentence, that is one additional test. And those 4 tests would apply to all the 4 situations. Okay, so that is for today's, tutorial 8, substantive testing on sales.